Hi all and welcome to the channel. It's great to have you. My name is Sam Evans. This week I'll be reporting on what Piper Sandler has said about Tesla, or more accurately, what one of their analysts has said about Tesla, Alexander Potter. Now, for those who don't know, Piper Sandler is an investment bank. Piper Sandler Companies is an American independent investment bank and financial services company focused on mergers and acquisitions, financial restructuring, public offerings, public finance, institutional brokerage, investment management, and securities research. And in 2020, their revenue was $1.24 billion. So they have a pretty significant revenue, and therefore I assume their opinion holds some weight. Teslarati reports via Joey Klender that the Gigafactory is perceived as a flagship holding. Now, Joey says Tesla is a flagship holding for Piper Sandler analyst Alexander Potter, who indicated the all-electric automaker stock is simply a must-have following the impressive delivery and production numbers the company reported late last week. Even with unpredictability and uncertainty regarding its upcoming gigafactories, Tesla is still primed to be a big winner in the savvy EV sector moving forward, Potter said in a note. Tesla reported 184,800 deliveries in Q1 2021, an impressive feat that peaked over Wall Street's consensus for what was expected in the new year's introductory quarter. Potter highlights this in a note to investors where he indicated the Wall Street estimates were bested by Tesla's real-life performance by over 10,000 units. Now, I don't think that's completely accurate. I think Wall Street appeared to be on the high end, on the high range compared to what many other analysts outside of Wall Street were predicting. And so people were quite surprised by the fact that Wall Street were predicting 165 to 170, even up to 175,000 deliveries. So Tesla really beat expectations on multiple levels here. He says, apparently avoiding bottlenecks that plagued other automakers with production delays like the global semiconductor shortage. Tesla seemed to sidestep those issues in Q1, bringing together a quickly accelerating production push of its two mass-market vehicles to deliver impressive figures that no analyst could have predicted. Tesla apparently sidestepped the semiconductor shortages, battery bottlenecks, and shipping delays that plagued many other automakers during Q1, Potter wrote, according to The Street. Now, I'm intrigued, guys. Tell me in the comments, how did Tesla manage to do this? How did Tesla manage to deliver a record quarter when other auto manufacturers, some of them even shut down their factories? How did they do it? I don't know. Does anyone know? Still, the impressiveness of Tesla's Q1 cannot completely be attributed to the company's evident ability to defy all odds, even with supply shortages. The more impressive factor was the fact that Tesla was able to accomplish such a monumental quarter while navigating the absence of two of its vehicles, the Model S and the Model X, which are the subject of focus moving into Q2. Now, that's a good point. You would expect that Tesla might deliver, say, around about 20,000 of the Model S and X combined, but because they stopped production to prepare for the new Model S and Model X, they only delivered 5,000 vehicles, which were obviously old inventory. So if we add an additional 15,000 vehicles to the total, we're now going from 184,500. So let's just say 190. That actually would bring us up to 200,000. So if Tesla hadn't have shut down Model X and Model S product lines, then we'd be looking at 200,000 deliveries for the quarter, which would have been unbelievable. While the Model 3 and Model Y continue to gain popularity across the world, the Model S and Model X remain absent from Tesla's current lineup of deliverable vehicles. Despite the company delivering a few thousand units of the flagship S and X vehicles thanks to inventory, the cars didn't contribute very much. This is an expectation CEO Elon Musk highlighted several years ago during an earnings call where he said the S and X were still produced for sentimental reasons. Despite the company's inability to scrap its two luxury models, the Model S and Model X were the most recent focus of Tesla's refresh project that spread across all four of its electric models over the past 8 months. The Model 3 and Model Y underwent very minor cosmetic changes, while the Model S and Model X were basically overhauled and redesigned on the inside. Slight exterior changes were also spotted upon the vehicle's first sightings at the Tesla Fremont factory, but the interior design rehab took center stage when Tesla released images during the Q4 2020 earnings call in late January. Now, guys, obviously, the exterior of the Model X and Model S didn't change all that much, and for good reason. They're good-looking cars. We don't need to drastically change them. I think Tesla made a good decision there. Clearly, the interior needed some updating, though, and really, I love the new interior of the Model X and Model S. In fact, I think it's one of the best-looking interiors of any car currently on the market. I'll be excited to actually see them on the road and see some test drives of these cars when they're out. Potter believes the S and X deliveries would have increased Tesla's Q1 2021 delivery figures by around 15,000 units, giving Tesla a massive 200,000 plus delivery quarter. The concerns from the Piper Sandler analysts do not have to do with the uncertainty regarding Model S and Model X deliveries to customers, but rather the unexpected delays that Gigafactory projects are experiencing. While Tesla has been extremely vocal regarding the first production dates of its upcoming manufacturing plants, Potter believes that uncertainty with Tesla's other models could translate to some delays at Giga Texas and Giga Berlin, but it's not making the analyst change its outlook on the electric automaker. We still think these new factories could cause margin pressure, delivery delays, and temporary multiple compression, Potter said, but we don't want to overthink things. TSLA is a flagship holding, and we would own the shares. Tesla Giga Berlin is slated to begin production of the Model Y later this summer, while Giga Texas timeframes remain uncertain at the present time. Tesla planned on Giga Texas being able to produce and deliver the first Cybertruck units by the end of 2021, but Musk recently told Joe Rogan that the company will accomplish this if they're lucky. If we get lucky, we'll be able to do a few deliveries toward the end of this year, but I expect volume production to be in 2022, Musk said. Alex Potter holds an average return of 34.2% and a nearly 5-star rating. He's ranked number 328 out of over 7,400 analysts on tipranks.com. So he's ranked in the top 5% on TipRanks. So I would say his opinion holds some water, clearly. Guys, I'm long TSLA, and I'm basically taking the opportunity at every moment I have to buy Tesla stock, and I highly recommend others to do so. Obviously, this is not professional advice, and I'm not a stockbroker or a stock analyst of any kind, really. But let's be honest. When you research Tesla on a daily basis, you learn more about the business, and it gives you a greater insight to Tesla's advantages over other automakers. Get into the comments. Our most popular comment here, guys, came from Peter Drucker. He says, Tesla made in China, Model 3 and Y have higher margins than Fremont and were also produced in greater numbers. Expect record profits during their Q1 call. Guys, this is interesting information, isn't it? If more and more vehicles are being produced in China, then Tesla's margins are going to creep up more and more. And remember, Volkswagen just paid Tesla approximately $100 million to buy credits from them in China. So you can add that additional $100 million to Tesla's earnings report. I would say, based on this information, more cars coming out of China and Tesla being paid by Volkswagen and maybe even paid by other companies, we don't know, for credits during this period, during the last quarter, that we should see a significant boost in earnings. FC responds and says, and made in China 3 and Y have much better build quality, so I would imagine costs associated with fixing problems either before delivery or after delivery will be much less versus Fremont. I don't know if that's a real game changer there, guys. Maybe. Tesla has got to get Fremont in check. Some of the things I've witnessed firsthand on my 4 Teslas are unacceptable. Trim pieces literally not even attached. The rear seat bottom wasn't locked in position, so I ended up pulling it up to see what was under there. That's when I noticed none of the plugs had been plugged into the seats. Not sure if they were the occupant sensors or the heated seat wires. But whatever they were, they hadn't even bothered to connect them. Why can't Fremont get their stuff together? FC seems like he's often fairly negative. I'm not sure he really owns 4 Teslas, but maybe he likes to think he does. Now, Philip responds and says, I can't wait to see what the next anti-Tesla talking point will be once their quarterly net profit minus regulation credits is positive, even with the huge SBC package Elon is getting. And Thomas responds saying that should be a nice surprise since most analysts are expecting lower margins without the SNX. Peter Drucker. Yep, most analysts have tunnel vision for a given line. If you can have more shifts and crack out more vehicles with efficiency improvements, the cost per vehicle goes down. Going forward, Giga Berlin and Austin will see even further improvements. I think Peter makes a good point. And let's add to that, guys. Tesla is constantly, not just every now and then, constantly looking to improve margins and efficiency processes. They're always looking for this, even down to the employee level, individual employee level. Even at that level, employees are looking for any way they can reduce costs, improve margins. So I think we're going to see continued improvements in margins over the coming years for Tesla. Guys, thank you for listening. I think this information is important. If you can, buy Tesla shares. I'll see you on the next one. Bye.